Hey everyone, welcome back to Gold Rush Reporter, your trusted source for expert analysis on silver and gold markets. I'm your silver analyst, and today we're diving deep into something that's been stirring the markets, a move that could reshape how investors look at silver in the months ahead. Lately, we've been seeing some surprising trends. Silver prices holding firm while the broader markets wobble. Many analysts are scratching their heads, wondering what's fueling this quiet resilience. Is it industrial demand, central bank behavior, or maybe a silent shift in investor sentiment? Let's break it all down. Right now, silver's position in the market is one of controlled tension. It's sitting in a range where both bulls and bears are equally active, but neither side has taken full control. That kind of balance doesn't last forever, and when it breaks, it usually does so with force. What's especially interesting is the disconnect between silver's physical demand and its spot price. Around the world, mints are reporting strong demand for coins and bars, yet prices in the paper markets remain capped. This is something we've seen before. A calm before a larger structural shift. At the same time, industrial demand is quietly building pressure. From electric vehicles to solar panels, silver's role in green energy is expanding faster than supply can keep up. Analysts in the renewable sector are warning that by 2030, silver demand could exceed available supply, creating a long-term squeeze that could dramatically influence prices. When you add to that the broader economic situation, high inflation, volatile bond yields, and central banks buying gold at record levels, it paints a picture of growing uncertainty in traditional markets. Silver, often overshadowed by gold, is starting to re-emerge as a serious safe haven and industrial necessity. We are entering a stage where every small move matters, and understanding these dynamics early can make all the difference. Because what's happening beneath the surface right now might be the setup for silver's next big breakout. Silver's story is often overshadowed by gold. But if you look closely, you'll see that the fundamentals for silver are quietly becoming stronger than they've been in years. While mainstream investors are focused on stocks and digital assets, those who understand real value are noticing a shift. The key lies in the balance between supply, demand, and long-term necessity. Silver isn't just another commodity, it's a metal with dual strength. Part precious asset, part industrial powerhouse. On one side, it behaves like money, a store of value during uncertain times. On the other, it's an irreplaceable component in modern technology. This combination makes silver unique, because even if investment demand slows, industrial use keeps the market alive. And right now, both forces are pushing in the same direction, up. One of the most underreported aspects of the current silver market is the shrinking supply chain. Mining companies are facing higher extraction costs, declining ore grades, and stricter environmental standards. Many of the world's biggest silver-producing regions, such as Mexico, Peru, and China, have reported lower output this year. At the same time, recycling levels haven't increased enough to fill the gap. This is a recipe for future shortages. Meanwhile, industrial consumption is growing rapidly. The clean energy transition, from solar power to electric vehicles, depends heavily on silver's conductivity. Each solar panel uses between 15 to 20 grams of silver. As countries race toward net zero goals, millions of panels are being installed each year. The same story applies to electric cars, 5G devices, and medical equipment. These industries can't function without silver, no matter how high the price goes. This growing gap between demand and supply is what analysts call a structural deficit. It means that even if prices rise, physical silver availability may remain tight. Investors are beginning to notice this, especially those who prefer holding real metal instead of paper contracts. That's why premiums on silver coins and bars have stayed high, even when the spot price hasn't moved much. It's a clear sign that the physical market is under pressure. What's happening now reminds many experts of the early 2000s, right before silver's explosive rally. Back then, people ignored the signs: declining mine output, rising industrial use, and weak currencies. But once the market caught up, silver jumped from under $5 to nearly $50 in less than a decade. History doesn't repeat exactly, but it often rhymes. And right now, that rhyme is getting louder. So while the headlines are quiet, the fundamentals are screaming. Silver's future isn't about speculation, it's about simple math and real-world need. And when you combine scarcity with global demand, the result is almost always the same: higher value ahead. As we move deeper into the silver story, it becomes clear that the metal's future isn't just about price movements, it's about global confidence. Every major financial shift in history has been marked by a move toward tangible assets. Silver, with its blend of monetary and industrial utility, sits right at the center of that transition. Around the world, we're seeing signs that the global monetary system is under pressure. Inflation remains stubborn, interest rates are unpredictable, and central banks are diversifying away from the US dollar. Most of them have been buying gold, but silver is quietly following in the same footsteps. While it's not yet part of most reserve strategies, it's increasingly being viewed as an asset that holds real value outside government control. The everyday investor is also starting to catch on. In recent months, silver demand from individuals and small institutions has picked up. Many are stacking physical silver, coins, bars, or even industrial-grade bullion, as a hedge against what they see as a fragile economy. And it's not just about profit, it's about preservation. Silver gives people a sense of control when currencies fluctuate and markets turn unstable. Meanwhile, on the industrial side, manufacturers are facing a problem. As prices rise, they can't simply replace silver with another material. Its conductivity, reflectivity, and antibacterial properties make it almost irreplaceable in high-tech applications. This creates a unique dynamic. Even if the price of silver rises sharply, industries will still need it. That ensures long-term demand, no matter what happens in financial markets. There's also an emerging geopolitical angle. Nations like China and India are becoming major players in the physical metals market. They're securing resources for long-term production and technological development. Both countries have increased their imports of silver significantly in recent years, suggesting they understand its strategic importance. This global shift toward accumulation is a signal that the world is quietly preparing for a new phase in the economic cycle, one where tangible assets regain dominance. We also can't ignore the role of technology in this evolution. As industries move toward automation, renewable energy, and artificial intelligence, silver becomes more valuable, not less. Every data center, solar panel, and semiconductor factory adds to demand. And since mining can't instantly ramp up production, supply remains limited. It's a perfect storm for long-term price appreciation. All these factors, monetary instability, industrial reliance, and geopolitical accumulation, are converging. It's not a question of if silver will revalue higher, but when. Investors who understand this are already positioning themselves ahead of the crowd, using patience as their biggest advantage. Because when markets finally wake up to the real value of silver, those early movers will be the ones standing strongest. As the fundamentals for silver strengthen, it's important to recognize how market perception can delay reality. The paper silver market, dominated by futures and derivatives, continues to influence the spot price far more than the physical market should allow. Big institutions and major banks use these paper contracts to control short-term movements, often pushing prices lower despite rising demand and shrinking supply. This creates an illusion, one that convinces the average investor that silver is stagnant or weak, while in truth, its physical value is being masked by temporary market forces. This manipulation isn't a conspiracy theory anymore. It's been proven in courts. Over the years, traders from major financial institutions like JP Morgan have been found guilty of spoofing and price rigging in the precious metals markets. These aren't isolated incidents. They're part of a system designed to protect fiat currency dominance and suppress the appearance of alternative money like silver and gold. Because if silver and gold rise too fast, it exposes the weakness of the dollar and the instability of central banking. It's a financial smokescreen, one that hides the true inflationary impact of years of money printing and debt expansion. But here's the catch. No manipulation lasts forever. Markets always correct back to fair value. And when that happens in silver, the adjustment will be explosive. For years, the price has been artificially held below production costs. When miners can't profit, they shut down operations. This reduces supply, creating shortages in both industrial and investment-grade silver. We've already seen signs of this. Production has stagnated while demand, especially from solar panel and electric vehicle manufacturers, continues to rise. Eventually, the laws of supply and demand will overpower the artificial paper market, and the result will likely be a rapid price surge. We're also entering a period where trust in traditional financial systems is fading. With record global debt and endless fiscal stimulus, people are beginning to look for assets outside the system. Silver fits that demand perfectly. It's real, finite, and cannot be printed. Even though paper contracts can temporarily distort prices, physical silver remains the ultimate store of value for those who see what's coming. That's why more investors are turning to physical bullion rather than ETFs or digital claims. They want the metal in hand, not promises on paper. Every economic cycle brings moments when truth breaks through manipulation. And when that moment arrives for silver, the shift will be dramatic. What seems undervalued today could become the most sought-after asset in the coming years. That's why staying informed and accumulating steadily, not out of fear, but out of strategy, is crucial. Silver's story is one of patience, resilience, and eventual revaluation. The longer it's suppressed, the stronger its rebound will be when the market finally wakes up to its true worth. As we wrap this up, it's clear that silver remains one of the most misunderstood and undervalued assets in the market today. The average investor is still asleep, distracted by short-term volatility or mainstream narratives that keep them from seeing the bigger picture. But those who study the fundamentals, who understand supply shortages, industrial demand, and the long history of monetary cycles, know that silver's real value can't stay hidden forever. It's not a question of if silver will break out, but when. And when it does, the move will catch most people by surprise. We've seen this pattern before. Every major bull run in precious metals started quietly. When sentiment was low, prices were manipulated, and only a few people were paying attention. Then suddenly, something shifts. Maybe it's a global financial shock, a currency crisis, or a supply chain disruption. And overnight, demand for physical silver explodes, while available inventory dries up. Those holding real metal, not paper promises, end up in the strongest position. So if you're thinking about where to put your money, whether it's $500, $5,000, or $50,000, remember this. Physical silver gives you control. It's wealth you can see, touch, and use. It doesn't rely on the internet, the banking system, or a third party to have value. In uncertain times, that's a level of security no digital balance can match. And for those who prefer diversification, having a mix of silver and gold offers balance between opportunity and stability, silver for growth, gold for preservation. Now, before we close, don't forget, our giveaway is still live. You have another shot to win that beautiful quarter-ounce gold coin that went unclaimed last time. All you have to do is subscribe to Gold Rush Reporter and drop a comment below this video. In just 2 days, we'll announce the winner right here in the comment section. Make sure to check back so you don't miss your reward. And we're not stopping there. Once we hit our next milestone, 220,000 subscribers, we'll be giving away a half-ounce gold coin as a thank you to this amazing community. Your support means everything. You're not just viewers. You're part of a growing network of people who understand the real value of precious metals. So hit that subscribees button, leave a comment, and share this video with someone who needs to understand why silver and gold matter now more than ever. Until next time, this is Gold Rush Reporter, your source for honest analysis and market insight, helping you stay ahead in a world that's changing faster than ever. Stay safe, stay sharp, and keep stacking.